Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Preston Walls. Thanks for being on the show, Preston.
Thank you for having me, Whitney. I'm excited for this.
Yeah, me too. Me too. Preston is the founder and CEO of Walls Property Group. His portfolio consists of 70 multifamily buildings valued over $300 million located in Seattle, Washington. His investment model is geared towards long-term passive income. Preston, thank you again for your time and generosity and being on the show. Give the listeners a little more about who you are, and let's dive into a few strategies and a few things that you've focused on that I know the listeners are going to benefit from.
You bet, Whitney. Thank you for having me, and great job with your show. I love what you've done and the broad array of topics you cover on this. Great job with it. But yeah, Seattle's my market. It's where I grew up. It's what I know. My father's a real estate developer in Seattle, and I grew up going on service calls with him and traipsing around job sites. And despite my best efforts to move away to college and lived in Manhattan for a few years after college, he got me to move back to Seattle. We built a couple of buildings together, and then he retired in 2008 just as the economy was falling apart, and been on my own since then.
Wow. Okay. So, one thing you and I were talking about, and I wanted us to get into, you've got a lot of buildings and valued over $300 million. So you're not the smallest fish in the bowl there, I would imagine, but all your properties are focused in Seattle. Right.
Yes,
I'd love for us to talk about that a little bit, like your strategy behind that and some other things that have come from that.
Yeah, Seattle, the Seattle market, it's dense, it's growing, and like many markets, affordability is a challenging topic. So one way that we've been able to address to create affordability is by creating more dense spaces. So my value add model, I'm looking at buildings that have a large delta between gross and net rentable square footage that I can either add new units into or reconfigure existing units to make them more livable for a roommate situation. So things like turning dining rooms into bedrooms, adding bathrooms, just to make the space more livable and through shared rent more affordable for residents.
Wow. Okay. So, why not look in other markets? Why just strictly stay there?
Seattle has a fair number of barriers to entry. Permitting, for one, is a long, tedious, drawn-out process in Seattle. There are a lot of tenant protections in Seattle that make it challenging to do business. And I've invested a lot of time and gained the knowledge and heartache of going through that process and getting to know it. The rent growth in Seattle has been tremendous. It's always exceeded my forecasts, and so the projects just continue to do better and better over time, and it makes having a long-term time horizon really pay off.
So what's been some of the benefits, Preston, that you would say that you've seen from focusing on one market and just staying right there?
Yeah, it's given me a lot of confidence in underwriting, being able to know the market really well and know the differences between not just neighborhoods, but streets within neighborhoods, the premium or discount that's associated with one side of a street versus another. I really enjoy and appreciate the granularity that comes with diving deep into a market and having the confidence to go into a competitive offer situation where there are a number of offers on a building and be able to have the right strategy and knowledge of what the property is going to become when you're done.
And what has been your all strategy for finding the multifamily buildings that you have now?
Probably half the properties are listed properties. They come through the MLS, and then the other half, I've been doing it long enough that the brokers know me. They know my strategy. They know that I'm going to close. They know roughly what terms I'm going to offer on, and so I see a lot of off market deals that way.
Okay. And what are those terms going to be? What do they know that this is what Preston's going to offer on?
They know it's going to be an all cash offer. They know it's going to have a short feasibility time frame and some non-refundable earnest money, and I don't know, probably a 45 to 60 day close.
And you've done it enough that they know you're consistent, right?
Yes, a lot of deals that I win in competitive situations, even if I'm not the highest dollar number out there, they know that I'm going to close. They know that my offer is the security of execution in getting the deal done, and for a lot of sellers, that there's some value in that, and that carries a premium, so they'll go with that.
Okay. Now, are you syndicating all these properties, or is it some of both, or is it all, or not syndicated?
I have a mix of properties. I buy properties on my own. I buy properties for my family. My kids own some properties, and I syndicate a number of properties as well.
Okay. And so, like, what's the normal size of property you're looking for?
My sweet spot is probably 5 to 50 units, all within Seattle. On the value add side, I'm building a couple projects that are in the 60 unit range, but the value add, that's 5 to 50 units is where I play.
Are you self-managing, or do you hire a third party?
I've set up to be as vertically integrated as possible. So I have a property management company. We handle the lease up on all the properties. We have a maintenance team. We have operations team, accounting. We also have a construction management team that handles all the renovation on the value add repositioning. We do go with third party general contractors on the ground up sites.
And so is that, and I ask this question often just because I like to hear different people's opinions that have vertically integrated companies like yourself and the experience level that you have. Is that something you recommend other people do? And, as far as, managing their own property or starting their own management company?
It's interesting. You ask 1,000 people, you get 1,000 different answers on this. I mean, there's value in both approaches. What it's benefited, or how it's benefited me, is having a leasing department, having an operations department, having a maintenance team, having a construction team. It gives me insight. What are construction costs doing? What are lease rates doing? And I'm closer to it. I can go talk to the leasing team, see what traffic's like, rather than going through a third party management company. The other way that benefits me, especially with lease up, those are challenging times, and you need to push a little bit harder on the leasing team than a standard turnover. You're willing to show the apartment a few more times than you would on a standard lease up, because you need the higher rent to get the loan on it to take out your construction financing.
Okay. And so, is when in your, I guess, career or in this path, did you start your own management company? Did you have, numerous units, or is it something from the very beginning?
So I've been self-managing from the beginning, and it's something that evolved and grew. grew into construction management and hiring third-party contractors to do construction management. We brought that in-house, and yeah, it's all grown organically.
Nice. Nice. So yeah, and I hear, both sides of that coin. So people say, no, I'm going to hire it out to the professionals and let them do it. And other people say, I'm going to be able to have a lot better handle on the cash flow and what's happening on the day-to-day basis, if we're managing it in-house. So, I can definitely see both sides of it, but I love hearing, somebody that's actually doing it and been doing this a long time. Just your opinion, and it sounds like it's worked really well for you. And so, what's next? How's your company growing? What's happening? Like where do you see it 5 years from now?
I see doing more frequency of deals, larger deals. We're building out our investor relations team. I mean, we started with friends and family money, and it's kind of grown to friends and family money, but having a long-term approach, and my deals go in with no exit time frame, so I don't have a sales time frame in mind for the assets, and it tends to gravitate towards family offices and endowments with longer term time horizons. So that's my target audience for asset raises for more projects and larger dollar value projects.
Okay. So, and tell me about, you talked about building out the investor relations team, and what do you hope to what's their roles going to be? How do you see that growing?
Yeah, it's the communication is really key in the investor relations part, and we got to a point where we had enough investors that I was not able to communicate frequently or effectively enough with them. So bringing in an investor relations team that can manage the frequency of communications. We've also rolled out our investor portal to all the investors that has all their K1s, all the tax statements, monthly reports, everything they need is right there. So they're not dependent on us to be sending that out. They can also have another way to access the information.
Yeah, that's nice. A lot of people are moving that direction. We've done that ourselves, and so I like that investors being able to go there and see that information anytime, and being able to communicate through there as well. But yeah, that communication piece is so important, right? Following up with investors and answering their calls or emails as quickly as possible. And can you give me maybe an example of how you all communicate with investors, or what's too much, or what have you found to be too much or not enough communication, or what you like to see happen?
Yeah, so we try to push something out monthly report, newsletter. We also have ways that they can check on the progress themselves. So it's kind of our more active sites have Instagram pages for them that monitor construction. So construction pages specifically for active job sites where there's daily progress that you can see. So that combination has been a good mix.
Okay. Well, Preston, what's been the hardest part of this syndication journey for you?
The hardest part has been getting that communication piece right. And I probably waited too long to realize that I needed to build out investor relations team and getting that in place. So realizing those inflection points in the business and taking advantage of them when the time is right.
Okay, and sounds like you've seen this issue though, and you're hiring people and you're building a team to take care of
it. There's no other way. Yeah, we built out an asset management team. I mean, I was doing all the financing, and ultimately got to a point where just the refinancing of the assets has become its own beast. I mean, strategy, since we're not selling the assets, the way we harvest the equity out of them is through periodic cash out refinances, and that's a lot of communication with lenders going back to them and getting new debt.
So your business plan or with these properties is to hold, right? I mean, you don't plan to sell these properties. There's not like a 5 or 7 year hold time or exit. Is that correct?
Correct. My plan is to hold indefinitely. I mean, that's not to say I'll never sell. If someone wants to offer me twice the market value, I could very easily be a seller, but that doesn't happen very often. And my goal is to keep the fees low to investors, so to minimize transaction costs and excise tax that are inherent with sales, and keep the cash flow, and ultimately hold the property long enough that it can turn into something new, that there's a new strategy. It can be redeveloped 10, 20, 30 years down the road.
Tell me about the types of investors that you have that are willing to invest in a property that they know you're planning to hold, forever. What does that look like?
Yeah, they have a long-term time horizon. They believe in Seattle. They believe in the fundamentals. The job story in Seattle has been really, really strong. Amazon bringing a lot of jobs to the city. It's a high barrier to entry market. Getting a new permit or permit for new construction is 2 to 3 years to get. So supply can be challenging. So being able to find creative ways to add density that's not through new construction, it's been a good story.
Yeah, and so our investors. Do you get many questions about? Now, wait a minute. When am I going to get my money back? What do investors expect? I mean, because it's going to be a different type of investor, I would think, that's going to be willing to invest for, just long term and just keep getting some cash flow or distributions for the foreseeable. I don't know. I don't know how that would work. I was just thinking about that and what investors would be asking when they're investing with you on a property that you never plan to exit.
Right. Well, the return of principal comes back relatively soon through refinancing activity. So the investor gets their preferred return, and then as much of their principal back through refinances. And then, there's a whole period, either through cash flow or subsequent refinance when the rest of principal is returned, and then it's just cash flow and watching that cash flow increase from there.
Yeah, and I guess I could see where some would be very on board about it. If they see your business plan, they say, okay, say 2 years in, there's gonna be a big cash out, a period where you're gonna be returning their capital, and so then there's just getting the cash flow from there. So I could see why that would be beneficial for sure. So tell me, what's a way other than improving your investor relations team? What's another way you've improved your business that we could apply to ours?
Technology, using technologies has been a big one. So on the property management side, digitized all the documents and leases. We have no more paper files. I mentioned the investor portal, so housing investor documents in a site that investors can log into themselves and access, and then using technology for communication, things like Instagram, share pictures on progress of the sites.
Wow. And how are you prepared for this potential downturn that everybody's talking about?
People will always need a place to live, and going from the last downturn, it was a tough one, but multifamily is well positioned for that, because at some price there is a willing renter for your place. We have some retail and some office in the portfolio, and in those hard times, it's really, really challenging to find a business that wants to start in your space. But through amenities, through location, and having a good product. Your last lever is price, and building some value into your buildings is an inherent cushion against a downturn.
And what is your best advice for caring for investors so they want to return to the next deal?
Getting the communication piece right. So as much communication as you can give them in as many different forms, so that you're giving them a lot of options and giving them different ways to consume the information.
And the number one thing that's contributed to your success?
Going really, really deep into something specific. So I've gone really, really deep into Seattle market, knowing it well, understanding it well. That's given me tremendous confidence over the years to invest when times didn't seem right or lenders didn't want to be aggressive. Having the confidence that the rent growth would be there, and where in the city and which neighborhoods the rent growth would come to.
Wow. Well, Preston, and tell us how you like to give back.
Yeah, I'm really passionate about seeing other people succeed, and I love to help out any listeners on the show. I'd love to be in contact. We have a program for our company that helps all the employees of the company get into their first multifamily deal through some down payment assistance. And another project that we work on as a company, for the past 5 years, we've been giving away free apartments, a year's worth of free rent through an essay contest. It's essayforfreeapartment.com, and the question changes somewhat each year, but it's somewhat revolves around, if you didn't have to pay rent for a year, what would you do to improve your life or improve your community? And it's led to some fabulous stories from within the community.
Wow. So then I guess those answers are judged, and somebody's selected to get rent free for a year. Is that right?
Yeah, we have a selection committee that employees of the company can elect to be on, and it's a process to read through. I don't know. We get about 500 submissions, so it's a lot of essays to go through, and there's some heartwarming and heart-wrenching tales in there, but ultimately it leads to just a tremendous feeling and creates a lot of unity and camaraderie on the company.
Yeah. Wow. I appreciate you sharing that and giving back in that way. That's very unique. I haven't heard anybody with a story quite like that's giving in that way. So thank you for that. And but tell the listeners how they can get in touch with you.
Yeah, our website is wallspropertygroup.com. That's the investor side, the syndication side, and wallspropertymanagement.com, all spelled out as the property management, construction management side. And we've got pictures of other before and after construction projects we've worked on there.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.